Hey everybody, I'm Deryk Faber, and welcome to another episode of Crypto Theory. I want to talk to you today about some terms that's going to help set the foundation for our charting journey together. I'm going to go through these, make sure you understand them, then that's going to make future videos easier to understand, and it'll be a little easier on me knowing that you know what I'm talking about. All right, everyone, so here we are. We're looking at one of my favorite cryptos that I have in my portfolio, Solana. And we're comparing Solana to the United States dollar on this chart. There will be times that I compare it to Bitcoin or Ethereum, and that's during the farming stage, and that's when we're kind of just looking to make sure that we're growing at a pace faster than the other coins. And we do that so that we're not wasting our time with some of these altcoins, because if we're farming in a stage with some altcoins and we're growing at a rate slower than the goal of building our portfolio with Bitcoin, Ethereum, or some of the major alts, then we're doing ourselves a disservice. We need to be growing faster than those, or just stay in those and hold. We're going to go into some basic charting terms. Candle is what we're looking at to start off with. You can change these on the chart from colors if you'd like, but the green and the red is pretty self-explanatory, just because green is good, red is bad. So for just viewership purposes, I'm blowing this way up for you so you can see a lot closer. And you can see what we're looking at. So as you can tell here, I'm looking at this chart at 1 hour time intervals. So each one of these represents 1 hour's worth of time. Another name for a green candle is a bullish candle because it's going up in value. It's showing an increase in value. And then a bearish candle obviously would be a red candle, which is going down in value. So as I explained on a bullish candle, the market starts at the base and ends at the top. It'd be just the opposite for a bearish candle. It starts at the top, goes down to the bottom, showing a drop in price. The highest point would be the top wick. The lowest point would be the bottom wick. And then as we chart, we start to see the flow of these candles, and that's how we're going to see the trends, which is going to help us make our decisions. So the body of the candle is the wider portion, which is between the open and close. The wick of the candle is the part that extends either the high or the low end. And that just lets you know during that time period, the high and the low of the price of that coin. Each candle represents a time period. I have it set for 1 hour. You can custom set this from 1 minute to days to weeks to even a month if you would like. Periods of time in which you're going to select these candles is going to be dependent upon your trading strategy, how long you're going to hold these, and how often you're going to trade these coins. So if you're looking to trade in a quick daily trade, you may switch this down to 30 minutes. And then as you can see, all those candles broke up into smaller candles. So now where for 1 hour we may have this one really big candle here. When we divide that into 30-minute candles, now you've got that one candle into two separate long candles. What could be hidden if you did this into 15 minutes or 5 minutes is you'll have some green candles hidden in there, but this is just a total from now, a 30-minute view from beginning to end. I like to stay in the 1 hour view just because I think it's a lot easier to see what the trend is actually going to be. If you get below 30 minutes, the reactionary time in which you have to see a trend and actually make moves on that trend is so fast that more than likely you're reacting after the trend has occurred, and you're not maximizing your profit margins. Now, candles, the purpose of them is allowing you to read what the trends are as they're developing. Like right now with Solana, so in the last 12 hours, or we'll just go 11 hours, which is since midnight, we're definitely hitting an upwards trend. And that's what the purpose of candles is for you to see what the trend is so that you can learn what to address, how to trade this trend. And then we're going to get into some trend lines and stuff like that here in a little bit. Typically, when you have a trend line go in a steady increase or incline like this, showing growth, there's going to be a natural pullback, which is a temporary reversal in the price action of that asset of security. and that's normal and good. So as this continues to go up, we will look for it to take a dip before it continues to go some more, and that's normal, that's healthy, and that's something we want to see. One thing you're going to learn and hear a lot of as we go forward is terms for higher highs and lower lows. This would be a higher high, this would be a higher low, this would be a higher high, this would be a higher high, this would be a higher low, this would be a higher high. So what we're saying is higher means that we're going up, or that we're bullish in the market. High means that we're setting the highest point or peak of this wave. So we're a higher high here because it's the highest point since this one, and we're going up in the market. This would be a higher low because while we're still going up in the market, we're not reaching the highest point as we previously did. And then as we reset for the next wave, we're hitting a higher high again, and then reset, and then we hit the higher high again, and then we hit the higher low because it didn't quite reach the peak of this wick of this candle, and then a higher high. If you want to see higher or lower lows and lower highs, that's when you're having a downtrend. So you've got a lower high, a lower low, a lower low, a lower low, a lower high, a lower low, a lower low, a lower high, and then we start to do higher highs and higher lows from there because we're going back up. So the first word would be low because we're going down, and lower low because it's lower than the last peak. Lower low, and so on. I know this can get confusing. I'm hoping the visuals are helping you, but higher highs and lower lows are something you're going to hear on just about every video when we're doing any tracking on charts. They're important to understand what we're talking about. And the main thing, like I said, is the word higher means that we're in a bullish market and that the trends are increasing in value. The lower at the beginning of this term stands for bearish market, which is a decreased value. So a higher high means that we're setting a new high point in a bullish market. A higher low means that we just did not break that high point in a bullish market. Now, a lower low means that we're setting a low point in a bearish market, and a lower high means that we did not break the lowest point in a bearish market. Again, I know it's confusing and I know it's going to take some practice. Don't get frustrated. It's just going to take some time. The next thing we're going to talk about is support and resistance. Now, support is the lowest part of a trend. So I think the best place to show that would probably be right here. This would be support and this would be resistance. So what we're looking for is for the trend to break either one of these two lines. If it breaks the line, it's going in that direction. So as we hit the lower lows and we're starting to hit the support line, we don't break that line. We then start to hit higher highs until, again, we break the resistance line, and then we reset to a whole new support and resistance. So then the resistance here, once we break that and set that, would be here, and then we're setting it here for our resistance. So now we've got support and resistance here, and as you can tell right now, we are looking to reset a new line of support and resistance as we continue to progress through the next several hours of the day. We're looking for a pullback before we really break into this new zone, so we can reset and see what those are going to be. I'm not going to set a resistance line into the new zone until we see how high we are, have a pullback, and then start to trend along that line like we did here. Hope this information wasn't confusing. Again, I know it can be. Really excited to get going and we can actually start charting. But it's really important that we all understand these terms together. We'll see you guys in the next one.